A massive Bitcoin move is coming. I hope you guys are all enjoying this lockdown. We're going to be talking about this massive Bitcoin move that's approaching as we're starting to see a descending amount of volume, but we have yet to see a major spike in volume, indicating that we are going to see a major move to the upside or downside. And I'm going to talk about what the whales are doing right now alongside with retail investors to predict where we're going to break out and what the best entries are for Bitcoin. As all of you know, we are bullish in the long term, but the short and medium term might be a little bit different. We're going to look at the 17 million unemployment jobless claims that were filed in the last 3 weeks and talk about how that's going to affect the stock market, because a lot of people are saying that we're back in a bull market, but we're going to talk about why that may just not be the case, and this could be a major bull trap. Now, when we look at Bitcoin's chart here, I want you guys to see what's actually happening, because as you can see, we got rejected from this 50-day moving average once and then twice here. And the first time that we got rejected, we saw a massive over 50% drop in Bitcoin's price, taking us down to around 3,900. And now we're seeing another rejection inside of this bearish flag. And then we've got the 200-week moving average right at this support level inside of this bullish falling wedge that's forming here on the daily chart. And so in the micro, we've got a bearish flag forming, but in the macro, we've got this bullish falling wedge. And so this validates our bullish opinion for the long term. And the good part about this falling wedge is currently we have that support level above that 200-week moving average, as we've seen act as a historical level of support for Bitcoin. And that's exactly where we actually bottomed out here in December of 2018, when Bitcoin's price reached $3,000 and then eventually ran its course up to 14,000 US dollars. And so the major indicator for me that we have yet to see a big move is the fact that this volume is still very low, and I'm waiting to see a spike in volume for us to validate this next move that's coming. Now, there's a lot that we can actually learn when we look at what's happening with the RSI, because as you can see on this 4-hour chart, you've got this bearish flag forming here, but with this RSI, this, in my opinion, validates the fact that this has yet to be the low. And if you look here at what happened with RSI, we initially came to this overbought range here on March 26, where we then saw this initial dump similar to what we saw here to eventually touch the support level of this bearish flag that's forming here. And I think that's exactly what's happening with the RSI here, as you can see in this chart. And so in my opinion, we're seeing a very similar structure here where we're testing right above that 40 as we did here before the final drop below 30. We have yet to go below 30 with the RSI. So that to me is a confirmation. I love to use indicators as confirmations. And so I think that validates the fact that we'll most likely come to the lower portion of this bearish flag, right around that 6250 area. But I also believe that there's a high possibility that we break this bearish flag. And I think that's going to be a very positive thing, because if we are able to break this bearish flag, what you can see is actually forming here is a bullish symmetrical triangle with this resistance level that's coming down, and it actually validates itself even here from July 18th. And you can actually take this chart all the way back and see that it touches the top here at around 14,000. And so this is a major level, and you can see that's where we actually found resistance at this last short breakout from that $3,900 level, and it went right back down from there. And that's also where that 50-day moving average is, as we talked about initially. And so I think the most likely scenario here is that we're going to break this bearish flag inside of this bullish symmetrical triangle that's forming, and we're gonna have to determine whether or not we're gonna find support at that 200-week moving average, or potentially even come back down to this support level in this macro formation. As you can see here, we've got another macro formation, another bullish symmetrical triangle forming, and there's a big possibility that we can even come down right above that $4,000 level and test that before seeing any sort of upside for Bitcoin. And so in my opinion right now, anything from the bottom of this channel, of this bearish flag, all the way down to that 4650 level is going to be a prime entry for Bitcoin as we approach this halving in less than 30 days, or the halving, whatever you guys want to call it. I know you guys make fun of me for saying that wrong, but I do believe that this is going to act as a strong level of support, because as we talked about in the past, as soon as we went below this major support level, you can see we saw a spike in buy volume come in, and this spike in buy volume was a lot more significant than the spike of sell volume that brought us down to that level. And I think there's a lot of reasons for that, and I think a big reason for that is just understanding how the whales are accumulating Bitcoin. I'm going to actually progress here a little bit more than I want to, but we're going to be talking about some very important charts here outside of the total hash rate, outside of the fear and greed index, but these charts specifically showing the Bitcoin balance on exchanges hitting all-time new lows in the last 6 months, along with USDT on exchanges hitting all-time highs in the last 6 months. And then you can see the Bitcoin number of addresses holding over a coin just hit a new all-time high yesterday. And then interestingly enough, this chart, which is a chart showing how many whales or entities are holding over 1,000 Bitcoin in their wallets, it's actually showing we're in an accumulation phase similar to where we were in 2016 prior to the 2017 rally of Bitcoin that went to 20,000 US dollars in January of 2018. And so you can see Bitcoin's price in black with the number of wallets holding over 1,000 Bitcoin in orange, and we're in this accumulation phase and not in this capitation phase. And so we're going to go into that chart here, but there is some very important things that I want to talk about first, because understand that right now gold is starting to see some all new highs. And what's interesting about gold is I believe we're going to eventually come back and correlate with gold after we start to see more confidence in Bitcoin when equity markets continue to drop. I don't believe equity markets are going to continue the bullish run that people think is happening right now, because we've only seen the beginning of the economic ramifications of this global pandemic. And therefore, in my opinion, with the federal bank announcing a new $2.3 trillion stimulus on Thursday after the jobless claims were released and they were above expectations, we expected 5 million jobless claims, but we ended up with over 6 million, and we broke yet another record, and it's almost been 3 records that have been broken. We broke the first record 3 weeks ago with over 3 million jobless claims. Then we broke another record with 6 million jobless claims. And then we had another week of 6 million jobless claims. And if you guys don't know, in the Great Depression in 1929, we actually had a 3.1% unemployment rate, which at the time was a record low, similar to how we are in a how we were in a record low starting this year at 3.2%, I believe. And then in 1930, we jumped to 8% in the Great Depression. In 1931, we jumped to 15%. And then 1932 to 1934, it was the famous 25% unemployment rate. The interesting thing about this right now is in 3 weeks, we've basically jumped to over a 10% unemployment rate when we consider the lockdowns that the majority of US businesses are undergoing right now. And therefore, this could potentially be worse than the Great Depression. It's funny because I watched this interview by Ray Dalio, as you guys know, the owner of Bridgewater Associates, one of the largest hedge funds in the world, and he talked about this being a long-term debt cycle. There's short-term debt cycles and long-term debt cycles, and this is going to be a potential long-term debt cycle, which is exactly what happened in 1934 during the Great Depression. And so realize that we're going to start to see a lot more liquidity and wealth flow to these storage of value assets as investors seek to preserve their capital. Now, interestingly enough, there are only 3 asset classes that can act as a proper storage of value, and that's going to be gold, silver, and of course, Bitcoin. And so realize, I believe, as we start to see more and more confirmations of this Great Depression, that is going to be our modern age depression, we're going to see more wealth flock into these storage of value assets. And when you take in mind that gold is a $7 to $11 trillion market and Bitcoin is a $100 billion market, it's only going to take another 100 or 150 billion in the crypto market to see double the valuations in Bitcoin, versus with gold, where it's going to take another $11 trillion to see gold's price double. And so if you're going to ask me, where do I see more growth potential? Well, of course, it's going to be Bitcoin, because it's a $100 billion market, and it's only going to take 100 billion in order for the valuations to double. And with the supply getting cut in half in less than 30 days, I believe that it's a very highly probable scenario for Bitcoin to start rallying to the upside before we see one last push to the downside. And so I'm very confident in these entry levels towards that 200-week moving average. We've been talking about that for some time, and we obviously saw that resistance at the 50-day moving average, as we talked about in our video 2 weeks ago. So I'd love to hear you guys' thoughts on that. I see we have David, Carlos, Bill, Hourglass on our live stream. Good to have you guys. But realize, I believe Bitcoin will follow gold. And the interesting thing about gold right now is, if you look at this weekly chart, this 50-week moving average is starting to trend away from this 100 and this 200-week moving average. And the only time that we saw that happen was when gold went into its parabolic bull run, similar to how Bitcoin was in its bull run in 2017. You can see with gold in 2012, it went on this parabolic run up all the way to around $2,000 per ounce of gold. And interestingly enough, you see this 50-week moving average far and above the 100 and 200-week moving average. And since 2012, we have not really seen that 50-week moving average this far away from that 100 and 200-week moving average. And to me, that shows that we are currently in a very bullish trend for gold right now, and that we will most likely see new highs and break that $2,000 per ounce level. And of course, when we look at future prices of gold, we've already broke that level, and we're seeing a rise in physical gold demand that isn't even being met. And therefore, when demand increases and supply stays the same, or supply gets cut in half in the case of Bitcoin, obviously price and valuations will increase. And so, interestingly enough, you can see with future prices, we're already breaking out, and you can see the moving average is also showing a very bullish trend has started. And so if you were to ask me where is the best place to preserve wealth right now, it's going to be the three major storages of value right now, which is gold, Bitcoin, and silver. And gold is looking really well, and I believe Bitcoin will follow. I believe Bitcoin is lagging just a little behind right now, because people are really just starting to understand what's happening in the markets, especially with equity markets, and people thinking it's back in a bull run. I think that people are still not confidently injecting capital into storages of value as they should be. And so if gold breaks a new all-time high, I think that it's very, very highly probable for Bitcoin to do the same, because you can see Bitcoin has a very similar pattern to how gold initially saw its major breakout. It saw a pretty long bear market, a consolidation phase, and then of course it started to trend back up as of recent. And so I think that's a very highly probable scenario for Bitcoin. And of course, people are asking me on the Discord, do you think the halving or the halving is already priced in? And the answer to that is absolutely not. In order for the halving or the halving to already be priced in, every person right now holding Bitcoin needs to, number one, understand what the halving is, the halving is. Number two, they need to understand the economic aspects of what it means to cut the supply in half of an asset. And then they have to also understand the storage of value properties that Bitcoin has and the deflationary properties that are naturally built into its code. And so if you would ask me, is the halving truly priced in? I would say absolutely not. And I think that's proven itself in the past, because as we all know, in 2016, we saw a rise in Google search trends for people typing in, what is the Bitcoin halving? And we're starting to see that happen now as well. And that always happens prior to the valuations or the actual rally occurring. And so I know a lot of analysts are saying that they're expecting this to just continue to rally up from here. I think that this 50-day moving average is going to be a resistance here. Now, once again, there is still that chance that we could come up, break this flag up to that 100 and that 200-day moving average around 8,000, but then we're in this zone where we've got a lot of pressure, and in my opinion, it's just a lot less probable for that to happen, but it's definitely a possibility, and that's why, in my opinion at this point, typically with bear flags, we stay at the top area, because typically you can cut a bear flag in half and there's a bottom and a top region. Typically, before the bear flag breaks, you stick at the top region and then you come down to the top half support, and then you quickly break down from there. You don't typically stay at the bottom of the flag before breaking it. And so far it looks like we're going to break this flag. I assume it's going to be over the weekend. However, we just don't know when that's going to occur. Interestingly enough, what tends to happen for Bitcoin when it bottoms out is it doesn't just wick its bottom and there you go, you've got a bottom. Typically when Bitcoin bottoms out, you can see when it bottomed out here in December of 2019, when we reached that $6,500 level before going back above 10,000, we consolidated in this region. Same thing here. You can see we consolidated in this region from that 2017 bottom. And so in my opinion, the 2018 bottom. So in my opinion, the bottom is yet to have been priced in, and that we will most likely come down towards that 200-week moving average. But anywhere between that 6250 and that 4650 area, in my opinion, is a very solid region for an entry into Bitcoin for a nice swing trade long. And of course, we want to see some major volume and a spike of volume come in once that happens. I don't mind seeing moderate sell volume that breaks this flag, but in the end, we want to see some strong volume come in. And then of course, that will complete this ascending formation here. And then I think that this bear flag comes out of play. And then what comes into play is going to be the new higher low that's formed once this flag breaks. Let's say it comes down to that 200-week moving average, and then it decides to go and break out from there. Well, of course, what ends up happening is we just formed the true higher low here. And so that becomes the bullish symmetrical triangle. We form another higher low. So the point is, I don't believe we've formed the second higher low yet. I think, with all the analysts saying, okay, yeah, this is the ascending channel that we're in. Yeah, we already broke out of that wedge, first of all. Second of all, it's a little bit of a violent uptrend for us to assume that during a global pandemic, Bitcoin's price is just going to skyrocket. Remember, gold is the household name for a quote-unquote storage of value, and Bitcoin is the new kid on the block. And so it's going to take more time for people to realize the intrinsic properties of Bitcoin as a storage of value. But as more and more people realize the feds are printing money, I'm sure you guys have heard the brrr, that little noise that people are making whenever the feds announce that they're printing money. As people realize what that does to our currency, I think that it's going to initiate a lot of fear, and that will eventually translate into wealth being stored in some of these assets like gold, silver, and of course Bitcoin. So other than that, I do want to look here at the Dow Jones Industrial. A lot of you guys have asked me about the stock market and what's happening. Well, let's zoom in here. First and foremost, I believe that we are currently in a very fake bullish trap here. And the reason I say that is, if you look at this market structure, it's very similar to what we saw here in December of 2018. So most people will say, okay, we found a bottom, we went up, we found a higher low, and then we continued the trend up. Well, that's going to happen again, right? We found a low, we found a higher low, and we continued the trend up, V-shaped correction, U-shape, whatever you call it, we're good, right? I don't think that's the case. Understand, in 2018, there wasn't 17 million jobless claims in 3 weeks. Businesses weren't shut down. There wasn't a global pandemic. Supply chains weren't cut off. U.S. bonds weren't at record lows. Treasuries weren't at record lows. The federal bank, they weren't announcing trillions of dollars of stimulus and quantitative easing. And so central bank assets and holdings weren't just skyrocketing. And it's not just the federal bank. It's the Bank of the People's Bank of China, the Bank of Japan, the European Central Bank. And so you see all of their balance sheets skyrocketing with printed money. All of these factors were not into play here. And so I think that what we're seeing right now is a very fake rally. And to be quite honest with you, I believe it's a good time for those that weren't able to exit positions that they may have had during this higher zone to be able to cut their losses fairly and assume that we're going to either see a double bottom here and potentially a way better entry, or we're going to trend sideways for quite some time. I just don't see a reason for the full recovery of our economy with all of these outside factors still playing a large part into us being in a recession. And so realize that we've got this 50-day moving average coming up, and I believe what's going to most likely happen. I know a lot of analysts are saying that 24,000 level here for the Dow is going to be a major resistance. I think it's a bull trap. I think what's really going to happen is either Sunday or Monday, because most analysts are saying, all right, we're going down from here. I don't think that's the case. I think that that's what they want you to think is going to happen. I think what always ends up happening is the opposite of what people think is going to happen. And I think what that is going to be is either Sunday or Monday, we're going to see a rally up, possibly towards that 50-day moving average. And that's going to be quite the rally here. If you look here, that's going to be a nice 3% rally up. But I think it's going to be very short-lived. I think it'll be a nice wick possibly before we clear shorts out and then we see the push back down. And so I don't believe we're just going to see a economic recovery this fast. Remember, the Feds are not printing money and injecting it into the stock market. They're buying bonds, junk bonds. They're buying treasuries. They're buying mortgage-backed assets. And so the stock market is outside of that. They are not stepping into the stock market. They never have. And therefore, they've talked about it as of recent, but it's just not something that's actually happening. And I'm not going to be one of those far left or far right individuals and throw conspiracies out there or anything like that. So I'm just talking what's, the truth right now. And the truth is they're not buying stocks. So I believe that's really what's going to happen here. I think this is a fake rally. I think we will either continue sideways or even possibly see new lows. Who knows? It's really a game of what's going to happen with this global pandemic, because it's the fundamentals here that are acting more than the technicals. And then I'm going to quickly go over confirmed transactions per day, but I really want to go over the Bitcoin addresses that are holding over 1,000 coins, and then the retail investors that are holding over one coin, and look at that chart, because I think that's going to determine a lot here about this big move that's coming and how to properly prepare yourself for it. And then I'll take some questions from our live audience to see. We've got Johnny TT Turbo on YouTube Live, Sebastian Z, SD Trader. Good to have you guys. If you guys want to connect with me after this, go on our Discord. The link is in the description, and I am always in there with our community of over 20,000 traders. With the confirmed transactions per day, you can see we're still trending at these lower levels. Almost looks like a bear flag. Yeah, in my opinion, it's a bear flag. You've got all these higher lows, these higher highs forming, but it's looking like it's in a downtrend as we saw this major push down from around 350,000 transactions per day to all the way down to 223 transactions per day, records that we haven't seen in a very long time, or levels we haven't seen in a very long time, breaking record lows that we haven't seen in months. And so I think that's all expected with the state of the economy right now. The same with the total hash rates. We're seeing this sort of dead cat bounce, I would call it. And so I think that there's a high probability that this could continue downwards. The fear and greed index, interestingly enough, went from around 24 to 25 back down to 15. So we're starting to see more and more fear come in really fast, especially as we saw that recent dump that we were expecting with Bitcoin. And so I'm expecting this to go a little bit lower if we continue to see lower levels. But remember, we want to buy into the fear. And I think that 6250 to that 5250 up to that 4650 level for Bitcoin is going to be the prime entry. But let's talk about this chart. So interestingly enough, we have a chart in front of us showing the amount of Bitcoin on exchanges in the last 6 months hitting an all-time low. You can see we just saw a major push down today, and people have to ask themselves, what does this mean? Does this mean people are buying Bitcoin on exchanges and then transferring them out of their wallets and then holding them in cold storage? And theoretically that would be a good thing, because if that's the case, then that means that the supply gets locked away and it's not on the market to be sold, right? But no, that's actually the opposite of the case. Whenever we see Bitcoin's valuation and price going up, you typically see more balances of Bitcoin on exchanges. And the reason for that is because people are actively trading Bitcoin if that's the case. And so with Bitcoin, we see more derivative trading than spot trading. But realize, like, if we look here, 2019 December, when we were at this consolidation zone, then we eventually trended up. That was the same time here that Bitcoin in 2019 found its bottom and then started to trend up into the high that we found here around 10,500 around February 13th. And so realize that with that being said, what you've got here, you can see that eventually increased this chart as well with the amount of Bitcoin on exchanges. But with this continuing lower, it allows us to assume that there are less people actively engaged right now and that we could possibly see lower levels. Now, that I think is more of a short-term indicator, but what's more interesting to me is how much USDT is on the sidelines right now. You can see we just formed another all-time high of USDT on exchanges. And so not only do we have Bitcoin at record lows, but we have all of this liquidity sitting on exchanges in US dollars, and they are going to eventually have to go somewhere, right? Because like Ray Dalio says, cash is trash. So with a record number of USDT on exchanges right now, we have so much liquidity that can come into the market. We have a lowering volume. And I believe what's happening right now is the majority of this liquidity is waiting for a better price, and it's going to inject itself, and we're going to start to see Bitcoin rally and correlate itself back with gold and then decouple itself from the S&P 500. That's what I believe is going to happen. And the reason I say that is when Bitcoin initially formed this low at 3,900, when we saw this major push down after derivative exchanges, especially and specifically BitMEX closed down because they were afraid Bitcoin's price was going to hit zero from all of the liquidations of shorts. And that's just a fundamental issue right now with Bitcoin, as there's more derivative trading than there is spot trading. But realize that when this happened and Bitcoin started to trend up, we immediately decoupled away from the S&P 500, which we were pretty much attached to for a long time until we saw this major move to the downside. And now we're 85% up from that low. And that's nowhere near how the stock market is performing, or nowhere near how gold is performing right now. And so understand that Bitcoin has shown quite the resilience during this economic turbulence, but also realize that I believe it's going to recouple itself with gold as it has in the past. But it's just a matter of waiting for the cryptocurrency enthusiasts and the ones that understand the fundamentals of Bitcoin to then inject their liquidity, versus us seeing gold right now breaking new all-time highs that it hasn't seen since 2012. But it's because it's a household name. It's the old kid on the block, while Bitcoin is the new kid on the block. And it's going to take a little bit more time for people to realize that it is also a great storage of value, and all of its benefits are being addressed right now as necessities due to this global pandemic, right? Paper money being infectious in nature, paper money not being able to cross borders while borders are closed, having a deflationary asset. So Bitcoin addresses all of these issues. And I think it's just a matter of time before you start to get more and more billionaires, more and more millionaires involved, and we start to see that liquidity flow in. And what once was a $100 billion market turns into a $500 billion market. And in that case, we see the valuation double, right? And so realize that it's a lot easier for Bitcoin's price to double than it is for any other currency or asset. And so very interestingly enough, we have what I see here as a very positive thing for Bitcoin, knowing that there's so much liquidity, not just aimed inside of the cryptocurrency market, but they're actually on cryptocurrency exchanges. And we've never seen this much USDT on cryptocurrencies exchanges in the past. So all of this liquidity ready to come in. And as we all know, the Bitcoin halving or the halving, that's not getting delayed. There's no governor saying that you can't allow Bitcoin halving to go through. No, it's a fundamental part of Bitcoin. And it's going to happen in less than 30 days. And when that supply gets cut in half, well, guess what? You've got all of this liquidity ready to come in. And so I think there will be a pre-market rally. I think that there might be a post-halving sell-off. But at the end of the day, I think that over the long term, over the next 6 to 12 months, that's when we'll really start to see Bitcoin come into play. Now, very interestingly enough, you can see we've also seen an all-time high in accumulators and hodlers, with the number of Bitcoin addresses that are holding over a coin hitting a new all-time high as well. So this not only shows you that people are here to trade Bitcoin, but we're seeing an influx of individuals coming in and saying, hey, even if it's just one coin, I'm going to come in and I'm going to buy that one coin. So if you guys are enjoying this this live stream and these Glassnode charts on YouTube, make sure to like this video, subscribe to our channel if you haven't already. But I want to show you guys more of these Glassnode charts. They're actually released on a daily basis. And so since we go live every Monday, Wednesday, and Friday, I think it'll be cool to address these. And I'm actually going to start sending these out on our Discord more often. But if you guys like these Glassnode charts, I'd love to hear your guys' thoughts in the live chat or in the comments. And I really am anticipating covering these charts more, because I think that some of these statistics are very important to keep track of, and all of these new all-time highs were formed today. And so, realize that there are a record number of not only retail investors, but even whales holding Bitcoin right now. Now, this is the chart that's showing the whales. And so when you look at this chart, interestingly enough, it also shows you what the whales were holding prior to the rally in 2017 that took Bitcoin over $20,000, which is depicted here in the black. And so in the orange, this is the amount of wallets that were holding over 1,000 Bitcoin, which I think in today's valuation is just over $6 million US. And so you can see what's very interesting is several months before the 2016 halving or the halving, I know I say it wrong. I'm going to keep addressing it, because some of you guys that haven't been on our channel and tune in, they're like, did he just say the halving? I just like saying it that way. It's like a New Yorker, right? They have the New York accent, right? So understand though, several months before the 2016 halving, we saw about 1,800 to 1,850 wallets that had over 1,000 Bitcoin. And so these are the whales that are holding onto Bitcoin in anticipation that price will go up. Interestingly enough, 30 days before the halving right now, we've got the same amount of whales holding over 1,000 Bitcoin. And so it's showing you that they're not selling off. We're not seeing a capitulation. It's actually an accumulation phase right now for the whales, and they're holding their Bitcoin tight at these lower prices, in my opinion, with the anticipation of prices going up. And remember, we've got over $1 billion in USDT on the sidelines for exchanges. And so I just don't know if there's any more of a bullish case for Bitcoin. I just wish I can have a breath of positivity for those of you that are locked down right now during this crisis. I know it's hard for all of us. I'm going through it the same way you guys are going through it, and realize we're all going through this together. But understand that there is a light at the end of the tunnel, and I am confident that Bitcoin is going to be the asset class that emerges and allows new wealth to be created and preserved. More than anything, it's the preservation of wealth that matters here, because with the Feds printing so much money and injecting so much into the economy, just buying junk bonds up, announcing trillions of dollars of stimulation into the economy, it's not sustainable for the long term. Realize that a lot of these government agencies, you go to New York, for example, the Metro, these are companies that are funded by their own revenue. The government and our tax money does not fund a lot of these government organizations, even USPS, for example, right? The United States Postal Office. But when you lock down the whole United States, you jeopardize their revenues and you jeopardize their businesses. And so they have to be bailed out. But the bailouts, obviously, and we've seen this in the past, they don't end up working well, because you're basically incentivizing companies for making mistakes, right? You're incentivizing companies that go down, that it's all good. It doesn't matter if you handle your balance sheets wrong. It doesn't matter if you buy back all of your stocks with your liquidity and your capital. We're still going to bail you out. It's not a good example, and it's not a sustainable system for the long term. I'm not saying these companies don't need to be bailed out. I'm not saying it's their fault, but what I am saying is our system is flawed, and we need something that can go. We honestly just need a deflationary asset that can act as a storage of value and a means of exchange between consumers and producers. And I think Bitcoin, and I know Bitcoin is going to be the one to come outside of the dust and rise in resiliency as it always has in the past. And so if you guys agree with that, like this video. I'm going to be taking a couple questions from our live YouTube audience here before I sign out. But I will be on our Discord for those of you that want to catch up with me. It's discord.gg/profits. For those of you listening on the podcast, C-Ron BTC says, but if 10 days of darkness happens like Kanan says, then Bitcoin will be useless. I wouldn't say it's useless. At the end of the day, if you hold Bitcoin on a hard wallet or you hold it on a cold storage like a ledger and you have some sort of generator to produce power, then at the end of the day, you can still access the blockchain. Now, I saw this recent study showing a 51% attack and what it would take to 51% attack Bitcoin, and staggering how the altcoins have really no comparison to the safety that Bitcoin has when it comes to being vulnerable for a 51% attack, which, if those of you guys don't know, is when you've got so much hash rate and so much liquidity overflowing Bitcoin's fundamental property of validating transactions that they're able to falsify transactions, and it becomes an attack on the blockchain. And so, it's just Bitcoin itself. I've talked about this for 2 years now. It's the one asset that will most likely be here 10 years from now, while these altcoins are most likely not going to be around. I know a lot of you guys want to talk about Chainlink and all of these altcoins. To me, they're penny stocks, right? And I love trading them. You guys know I send those signals out. I love throwing a little bit of capital and saying, okay, cool. If it goes up 50%, awesome. If it goes down 50%, well, that was a loss, right? So it's very much like penny stocks, but Bitcoin has the most mass adoption. It has the most, most people recognize it, and it has the most use case at this point, right? Most of these altcoins, and that's the main thing here, is that they just don't have use case, in my opinion. So Peter says, if we don't agree with that, no need to like. No, I would implore you to state your opinion and produce a thoughtful conversation about it with me if you have a different opinion, and that's what the chat here is for. Pedro PS says, should the shorting stock transactions be in play now rather than finding lows to buy? I would say a short for the Dow at this level here, where the 50-day moving average is, would be a great short. I think that this would be a great short, because I don't think we're going to stay at this level for too long. I think this here was a bull trap where we're going to have all of these over leveraged shorts, and then price action on Sunday with futures or Monday, it's going to just rally up to this 50-day moving average, and it's going to clear all of these shorts out. But if you have a short near that 50-day moving average, I think that's where things are going to look a lot nicer for you when it comes to shorting. But I think it would be a good short, and I also think it would be a good place to cut losses for those that are holding. I just don't believe that there are enough fundamentals that will allow the Dow Jones Industrial or any other aspects of our stock market to recover back to the highs that we saw in January, just because of the fact that our economy is so much different. We're all in a lockdown. Businesses are shut down. We're only opening essential businesses, and the government decides what's an essential business and what isn't. And so you just realize that it's not going to be a recovery like we saw in 2018. In 2018, it was like an oil war that caused this. Well, guess what? We've also got an oil war. But on top of that, we've got a global pandemic. And on top of that, we've got treasuries at all-time lows. And on top of that, we've announced trillions of dollars of quantitative easing and money printing, right? So we're in a whole different ballgame here. And then on top of that, all these businesses are shut down, right? And to put the cherry on top, we've got 16 million people filing jobless claims in the last 3 weeks, putting our unemployment rate at above 10% already. And that went from 3.2% 2% to 10% in 3 weeks. We went from record lows to 10% unemployment in 3 weeks. Well, the last time we saw a global depression in 1929, we were at record low unemployment, 3.1%. By 1930, a year later, we got to 8% unemployment. And then 1931, we got to 15%. And then for 2 years, from 1932 to 1934, we were at 25+% unemployment rate. And that's what people called the Great Depression. Well, if we just went from 3.1% to 10% in less than 3 weeks, last time it took at least a year and a half for that to happen, but that just happened in 3 weeks. Well, to me, that is going to cause economic ramifications that are unseeable right now, and we've yet to see the full ramifications of this. And so there's just no reason, in my opinion, for the economy to be back at these all-time highs anytime soon. The immediate industries that are affected by this are the cruise lines, the travel industry, right? We know that they're affected, but then there's all of these domino effects that occur, and it's going to affect other industries. These jobless claims and these unemployment numbers are also going to affect consumer habits, consumer spending, priorities change, right? Our whole society is going to change. And so realize that things are going to have to be restructured. And therefore, in my opinion right now, gold, silver, and Bitcoin are the 3 asset classes that will preserve your wealth. And if you really want to be conservative, then just buy a ton of physical gold. Don't even go into Bitcoin or even silver, right? If you're really that conservative. I think silver might be a little bit better of a bet right now. And, silver has a lot of great properties to it. They say the elite, they like to accumulate silver while they tell everyone that gold is really the one that you want. But in reality, you want silver. I've heard that conspiracy before. But I'm not a conspiracy theorist. I'm not going to go to a far right or far left stance here. But what I will say is I think Bitcoin is the place to be, in my opinion. It's a $100 billion market, and it's only going to take $100 billion to double its valuation versus gold that's at 11 trillion. It's going to take 11 trillion more to double its valuation. So if you're going to look at me and say, what's going to preserve my wealth, but also has the highest growth potential, I'd say gold, right? Obviously, like Ray Dalio says, cash is trash, especially with inflation, and especially with the Fed's printing records amount of money to stimulate the economy. Of course, they're doing it a lot faster than they did in 2008 because they learned a lot from 2008. But at the end of the day, I don't think that's going to improve the production of these companies after taking such a major hit. So Eric Mora says, Naeem, been following you since sniperstube. I've learned so much from you, and your content is always unbiased, easy to understand, and humble. Thank you for your education. Thank you, Eric. I appreciate you, brother. Johnny Turbo says, the market has already factored in the worst case scenario based on the 1987 recession plus Great Depression. Earnings season results will be the new information that can affect the picture. Absolutely. But I think there's a lot of ramifications that are yet to be priced in here as well. California, like for today, they just announced an extension to their lockdown from April 31st to May 15th, right? That's another 15 days businesses have to be shut down. Was that priced in at market close? No, it's new news, right? It's not like Governor Newsom said, hey, we're going to be shutting down the economy. Make sure to sell your stocks. No, it's not. I mean, California has a big part in our economy, right? I mean, it's not, the only part of our economy, but we're going to start to see new things come up, and with uncertainty breeds fear, and fear breeds sell-off. And in my opinion, I watched a Ray Dalio interview yesterday, and he said that this could be worse than the Great Depression. He talks about the short-term debt cycles and the long-term debt cycles. The long-term debt cycles are a lot worse than the short-term debt cycles. He said that 2008 is a short-term debt cycle compared to what's happening right now, which he believes is a very long-term debt cycle that's occurring. And so if that happens, then markets go down a lot further, right? So the last one was 1930. So Brent Jaggers from Twitter says, thoughts on XRP news with JP Morgan hints. Somebody mentioned that in our Discord today. Here's what I think about Ripple. They create headlines, and the funny thing is they talked about Bank of America and their partnership in June of 2019, and now they're bringing it up again just because the Bank of America chairman or one of the board members went on a podcast and said Ripple. But in my opinion, they love to repurpose articles from the past. They love spending money on marketing and articles. That's why you always see Ripple in the headlines. And then people go to Coinbase, they see XRP, they see it's under $1, they buy XRP, and then you got Brad Garlinghouse. He comes in and sells XRP to fund the company management and processes, and really it's just to fund their salaries, in my opinion. And so I'm not a big fan of Ripple, but if you want to be a fan of Ripple, just understand the use case of Ripple, and there's no purpose of the value being so high. It's an intermediary for a cross-border transaction. Okay, well, that means you take a Swiss dollar and you put it in XRP and then write to USD within seconds to transfer it from a Swiss dollar to USD, but you use XRP as an intermediary for a second, right? So for something like that, and then they burn all of these coins, and then they have all of these coins on storage. They have such a high, it's such a mess. It's centralized, it's a company. So as a fintech company, I think Ripple is great. As a cryptocurrency, I'd rather have it in Bitcoin, right? I'd rather have my money in Bitcoin. So Johnny Turbo says, yes, it's debt cycles, but the Fed is bailing these out. Dalio didn't know the Fed would be doing what they are. He mentioned the bailouts. It's in his book. He talks about it. It happened in 2008. That's when it all started to happen. You know what they say, the Federal Reserve, they're nor federal, nor do they have a reserve, right? Odo75 on YouTube says, we are in a new time. It will be interesting to look back at this period. I agree. Adele says, Ray Dalio said we are heading into a Great Depression. I believe it. Albert says, Naeem, this is probably a longer discussion type question, but can you briefly explain how Bitcoin could be used in an actual, used practically worldwide currency, not just as a trading market? Yeah, absolutely. So you've got a Disney college program student in the United States working for $7 an hour minimum wage. If you guys don't know what the Disney college program is, if you come to Orlando or California where you have Disney World or Disneyland, they've got students from colleges all around the world that come and they work at Disney for a minimum wage and experience. And understand that a lot of these kids come from developing countries like the Philippines, for example, where $1 in the Philippines could buy you a full-on dinner, or $1 in Thailand can buy you, a full-on dinner or lunch, whatever it is. So realize that the cost of living in these countries, the point is a lot less than it is in the United States. So you've got a Filipino college program student here, and they're making $7 an hour. To them in their country, that's a lot of money, but when they're living here, it's not a lot of money, but they have family back home. They want to send money back to their family, right? Well, they go to Western Union, and Western Union says, okay, cool, we'll send this money out to them in US dollars, but we're going to charge you a $35 transaction fee. Oh, $35, that's like 3 weeks worth of food for my family. Well, look how much that transaction, just because it's in US dollars and has to be transferred in that currency, is going to devalue the amount that he can send, or she can send to her family or his family in the Philippines, right? So how is Bitcoin used? Well, I had a buddy of mine a week ago call me and say, hey, I've got a client. He wants to become a personal client of mine, and it's $20,000, and he wants to send it in Bitcoin, Naeem. I don't know how Bitcoin works. Could you help me take this transaction? I said, yeah, sure. Open up a Kraken, get your KYC, whatever you need done, and I'll teach you how to do it. Long story short, the transaction is done. The client was in Australia. He sent the $20,000 in Bitcoin. I showed him how to immediately liquidate it. He told me, he was like, oh, should I hold the Bitcoin? And since I know technical analysis, I was like, oh, well, Bitcoin's at 7,500. I'm expecting a downturn. I'd say liquidate it immediately. Thank God we did, because we hit 3,900 like shortly after. But guess what? He paid like $4 on that transaction. $20,000 from Australia to the United States, $4, right? So some people are like, oh, well, Bitcoin doesn't have the network capabilities of MasterCard or Visa, right? Well, it doesn't need to have the capabilities of MasterCard or Visa because it's not competing with MasterCard or Visa. It's not meant to be a merchant processor. No, it's a storage of value. And guess what? It's a volatile asset, right? It's the only asset that has those two properties combined with each other. Mostly volatile assets stick on one side and storages of value stick on another side. Bitcoin is a combination of both, right? So it's, yes, in a very premature phase. It's kind of in the ghettos with the majority of use case being traders. But at the end of the day, it has deflationary properties built in, as you guys are going to realize here. with the upcoming halving that cuts the supply in half from 12 Bitcoin to 6.5 Bitcoin per miner or per mining reward. And so what that does is it cuts its supply. Every time that's happened, Bitcoin has quadrupled or more in price. And so you'll start to realize that these deflationary properties are a sure way to ensure an asset that can preserve your wealth and not just be printed by a government just because they choose to do so. And so I hope that was a good explanation. I'm going to wrap this up. If you guys enjoyed that explanation, like the video and turn on your post notifications, by the way, because I go live Monday, Wednesday, and Friday, and it's just at random times based on my research and how long that takes. I am going to wrap this up. Thank you guys for tuning in. I'll see you guys in our Discord here real soon. Norm says USA unemployment is the equivalent of 2 New York cities. Crazy. Albert says, thank you. You're very welcome. Philip says, yes, but to buy Bitcoin, you get commission. Interesting. Brent Jaggers on Twitter says, it was talking about that send money in SEC, new way of banking. Interesting. Just Free says, good to see you, brother. Stay safe. Appreciate you. I hope you guys stay safe. I can only wish you guys the most positivity and optimism, as I know there's a lot of negativity out there. The best advice I can give you is that with every night comes a new day, and you have to realize that there are so many opportunities right now, and regardless of your financial position, your emotional status, your relationship status, whatever you're going through right now, physical deficiencies, whatever it is, just realize that it's a good time to just take a breath of fresh air and realize that at the end of the day, the world is all going through this with you, and there's people in far worse situations. And so, I was watching this movie on Netflix it was Bill Gates' documentary, and he talks about how over 40 million people have no access to a toilet, right? Something so simple, but so profound, and something that we take for granted every single day. So realize that just the fact that you have the ability to tune in on this live stream is a blessing. And so, appreciate the small things. And so thank you guys for tuning in. I am out. It's a Friday night. I don't want to take up too much of your night. It's 1 a.m. here, and I appreciate you guys tuning in. I'll see some of you guys on the Discord. Remember, with Bitcoin right now in the micro perspective, I don't want to short yet until we break this support level. I'll show you right now. Currently with Bitcoin and where it's at, I just don't feel comfortable shorting it. Until this support level is broken, 67.50, I'm not going to be shorting again. I've already got my short positions that we actually called out in the Discord from around 73.50. Still have those locked in. Took some profits on that, 50% off the table. We've got a break-even stop on that. But currently, we've still got this support level holding. And so until we can get confirmation of the break here, I don't think there's going to be much more support. This is also the support level from the quote-unquote, ascending triangle everybody was saying that was forming. So understand that this could be a potential reversal area. We could go to 8,000, 7,600 from here. We don't know, right? But, I think the maximum upside here is right around that $8,000 level, potentially. But I don't think that's going to be the case just yet. I still believe that the weekend manipulation is prime and early, and it has a lot more room to go. And so just realize that my prime entry levels right now are going to be the bottom of this channel, because as we talked about, there's a very similar RSI pattern forming here where initially we went from overbought up here, and then I'll show you here, we went from an overbought region up here, right, overbought, to oversold, and then we went right above 30, tested above 40 again. Remember, 40, anything above 40 is neutral. Anything below 40 becomes bearish. We initially went bearish, went neutral, and then we finally bottomed out. And you can see, so we saw one push down and then the final push down. And then that ended up creating this channel support. Over here, we've got this top formation, this overbought region, this initial downtrend. Didn't go oversold, but we did get into the bearish region, retesting above 40 now. And I think we'll at least see one more push down, if not another push down here, if not even another push down there. And I think more of this is going to happen after we see how markets open on Monday, but I definitely think we could see this part of it by the end of this weekend. So thank you guys for tuning in, and I will see you guys on the Discord. And I appreciate all of you guys tuning into the live stream today, and I'll see you all on Monday. Snipers out.